Now, Goldman may post record trading profits, but the firm has been lowering its leverage lately. So let's head now to Lydia Thu at the markets desk for more on that angle. Good morning, Lydia.
Good morning, Scarlett. Well, if the analysts are right, Goldman Sachs may be poised to post some of the best earnings we've seen since they had record earnings back in 2007. But a big part of that earnings, those record earnings, was the amount of leverage that Goldman had. And of course, we know deleveraging has really been the buzzword of 2008 since we've gone through this whole credit crisis. So I want to take a look at the leverage ratio, total assets to shareholder equity, and how it's been changing for Goldman Sachs. This is since 2004. Now, in the green, you have Goldman Sachs here, the leverage ratio, up around the 25 range, which is it's now fallen to about 15 here. And on the bottom, you have Bank of America. Remember Goldman Sachs becoming a bank holding company back in September of last year. This is Bank of America's leverage ratio. You can see Goldman's getting closer and closer in line with that of Bank of America. Bank of America in about the 10 range. So you can see Goldman has indeed been lowering that leverage ratio. And of course, something to watch today will be to see how that leverage ratio looks now and whether or not it's going to hang out in this range or if it's on the rise. I spoke with Richard State, who's an analyst over at Atlantic Equities in London this morning. He expects it to hang out in this range and sort of slowly creep up. He says the real question is not so much to do with its bank holding company status, but it has to do with the regulatory environment, because a lot of those public officials hoping to see this the decreased leverage. So we'll see what happens there, Scarlett, but definitely something to watch. Back to you.
Thanks very much, Lydia.